Good evening, everybody. This is James coming from Dividend Stock Talk, where we talk about investing in dividend stocks for weekly and monthly cash flow. Today is Wednesday, October 11th. It's 10:31 p.m. And halfway through the week, let's jump on in, see what we're looking at, see if we can make this a quick, painless situation here. Here we go. Logging into our account. We seem to have 6 positions. Let's check them out and see what we are looking at. ACN's the first on our list, so let's see a look at what ACN is doing, where they are. ACN starts out the year at 117, travels sideways between the 114 and what is that, 126 area for about 9 months. A quick little drop down here in June. Gap down from 126 to 122, and from there it shoots on up to the 136, 137 area, which is where she is today. Now, we got the 135, 136 spread, and it's at 136.91, so we're 91 cents into this. So we are going to make this one as long as she stays above the 136 come Friday at 4 p.m. So ACN looks good. Let's look at CL, Colgate-Palmolive, and see what that looks like. Colgate-Palmolive starts out the year at 72, drops down to a trading range of 66 for about 4 months, and finds a low of the year at 63.54, right around January. Jumps up to 73 area, trades sideways for a few months, tries its hand at 71 for about a month, jumps up and finds the high of the year at 77.24. From there, tumbles on down back to the 71, 72, 73 area, which is where she's at. And she gapped up today. I'm not even going to take a look. All right, let's take a look. Don't need to take a look at that huge gap up. Tells us we're in the money as it is. 72, 72.50. We got 74, 73. So way into the money. As long as she stays above 72.50 come Friday afternoon. All right, that's good. Makes me happy camper. CVS, for some strange reason, we got CVS. We got a covered call on CVS. Now, CVS started out the year at 86. Quickly found the high of the year at 88.92. And then she quickly dropped to 83, and then about a week later she drops down to the low of the year of 69. She got the high of the year at almost 89, and within a couple of weeks she's at the low of the year at 69. That's a huge drop. Well, not huge, but it's about 20 points. All right, that's huge. That's about 20%. Okay. All right. From the low of the year, she comes on up 75 for a couple of weeks, and then she trades in a range between 76 and 82 for the whole year, except for the last 3 or 4 days. The last 3 or 4 days, she went from almost 81 to down to 73. Okay, now we have a couple of positions, I believe, on CVS. Yeah, we do. We got the covered call, which we didn't do because it wasn't proper, because we bought CVS last week and we made money off the covered call last week. I got a stuffy nose for some strange reason. It comes and it goes. Ah, wow. I never had allergies my whole life. Now I'm in my 50s and I get allergies for some strange reason. All right, so we got the covered call at 80. Now it dropped Monday. It dropped on Friday. We did the covered call last week. It dropped on Friday, so we weren't able to do a covered call because it wasn't worth anything. Now, I might want to do a covered call next week or see where it shows. You got the dividend coming up in 10 days, so there's no reason why this thing should stay down where it is. So it's at 73.90. And we also did the spread, the 76 and a half. And we did that on Monday. Okay? Now, it was worth something on Monday. Today it's not worth anything. Shouldn't say it's worth something. As long as she stays above 76.50 by the end of Friday, we'll be okay. But she's not even close to it now. She's at 74. She's got quite a ways to go, which, as you can see, she does make those moves in one day. So CVS looks like a loser at this moment in time. Hasbro. Let's take a look at Hasbro. Hasbro starts out the year at 79.28, quickly finds the low at 76, jumps up to a trading range of the 81, 82 area, trades there for about 4 months. And then she gaps up from 82 to about 96, and she trades for it in the 96 area for about 4 months. And then she travels up the next 2 months, right around July, and finds a high of the year at 116. Stays at 116 for a couple of days, and then gaps down to the 105 area, and then she's settling in at the 96. She's been in the 96 area for about 2 months. Now, where are we positioned on Hasbro? All right. Wow. We got 2 positions on Hasbro. 94, 95 spread, which we're way into the money on that one, and the 95, 95 and a half spread, which we're way into the money on that one. So we're doing very well on Hasbro. Now Lowe's, which is the next one on our list, I believe we did another covered call on Lowe's. So let's take a quick look at Lowe's. Lowe's started out the year at 70.86. Within a week or so, she finds the low of the year at 65. Now, from 65, she jumps up a month later to the 75, between the 71 and 75 area, and trades for about 2 or 3 months there, and then gaps up from 75 to a trading range of 82 for about 2 months. Finds the high of the year the month after that at 86.25, and then slowly stair steps down to find the double bottom right around 72. Bounces off that, tries 82, but doesn't stay there, but she's hovering around 81 at the moment. So we have a covered call on Lowe's. We had 100 shares of Lowe's at 82.32. We sold the 82.50 what do you call it? 82.50 call option, which seems kind of weird. So I could sold 2 contracts, but I only owe 100 shares of Lowe's. So I better get in and buy another 100 shares. All right, so I'm going to buy 100 shares of Lowe's right now, because that's going to do nothing but mess me up. All right, where's trade? All right, let's just go here. LOW. All right, let's buy 1,000 shares. Why not? And then what we're going to do is we are going to sell so we have order in for 1,000 of those. All right, at the market when she opens up in the morning. That will give us 1,100 shares. And I sold 2 options already, so let's do 81. So that make it 11. Confirm, send. All right. It's all over the place. All right, here we go, back here. All right, so what do we got? All right, looks all fine and dandy. All right, so what we're going to do is to fix the mistake I made, let's view the trades on Lowe's. All right, now, see if we can fix this mess. On the 6th, which was last Friday, we bought 100 shares of Lowe's. We also sold the covered call on Lowe's on Friday also. So we picked up a little bit of money on Friday. Now, but Monday we sold 2 contracts, which comes to 200 shares, not 100. So see, I made a mistake there. The 82.50 collected 57 cents. However, that puts me into interesting predicament because I don't own 200 shares. So I just put in an order to buy 1,000 shares, and that's going to bring me up to 1,100 shares. So I'm going to sell the 9 spread, the 9 call options for someone to buy it from me at 82, and I'm hoping they get it at 81.38 first thing in the morning. I'll make 11, 12 cents off of that. Who knows? We'll find out in the morning. Oh, what was that other one? All right. So that's the first 2. That's the stock, okay? And this is the call. We sold 2 of the 82.50 calls, which was supposed to be the covered call on the stock. Then we have the spread, the 80.50, 82. Interesting. So as long as the stock stays above 82, we'll be profitable on that one. Rather odd, because the stock is at the moment 81.21. So we want it to go up above 82. All right, that ought to be interesting to see how that works out come Friday. Because now the stock has to move up above 82. All right, TXN is the last one we're looking at. TXN, Texas Instruments. TXN, try that one more time. All right, TXN started out the year at 69. You got a double bottom at 67 a couple weeks later, and then she just continually moves up to a trading range of 81. Now it trades in the trading range of 81 for about 6 or 7 months, and then right at the second week of September, she jumps from 82 to 92, $10 jump. But it took a couple of weeks for it to get there. That's where she is now. She's at 92.87, and we seem to be into it, the 89.90. So we're looking for it to stay at 90 or above. Now the reason why I like these kind of spreads, we got a couple of things going in our favor. Number one, the software that I came up with, there's lots of kinds of fun algorithm mathematics that tells me what stocks are going to do what I want them to do. And that is the main precursor to why I buy these spreads. Because stocks move 3 different directions. They're going to go up, they're going to go down, or they're going to go nowhere, which we call sideways. So up, down, or sideways. Okay. So if you can put on a trade that's going to make you money in all 3 circumstances, then why not? The spread trades, such as this one, the 89.90, as long as the stock stays above 90, I win the trade. And it's just that plain and simple. Okay, so the stock can go up, I'll make money. The stock can stay the same, go nowhere, I'll make money. And it can go down a little bit, and I'll still make money. Matter of fact, this one can go down $2.87, as long as it's at $90 or higher come Friday at 4 p.m. I will make however much money I'm going to make on that position. I did that on the 10th, which was yesterday, and I believe it was a 25% trade. So I'll make 25% come Friday afternoon if it stays above 90. All right, all that being said, that's everything that we're looking at today. See if we have any questions. Come on, guys, hit me up with some questions. All right, I did have a question today about CVS. Now, CVS, we got a position here. Now, we talked about this one. We got 200 shares of CVS. Okay, now we didn't sell the spread, the call option, the covered call on CVS, only because Friday she dropped to a point where it became almost not worth our money to do it. Okay, so CVS, it's at 74 right now, 73, 78, 74.15. Now, we have it at 80. So as you can see, it runs out of money right around 76 and a half. So it ain't worth selling the 80s because they're not worth anything. Now I could go further out, you know. If I go further out, that would give me more options to play with. Now we're looking at the 80s. So if I want to look at 10 days from today or next Friday, they're still worth nothing. So what's the point? Okay? And I'm not going to go out further than that because give me further to go. Okay. It's like 9 days. And it's worth a penny. That ain't worth anything to me. Alright, so that is basically worthless. So it's not going to do me any good. So I'll just have to sit and wait for it to recover. Is CVS going to recover? Well, it should. You know, the only thing that... Look where it's been doing for the last year. She started out at 86. Okay, quickly found the high of the year at 88.92. A couple of weeks later, she's at the low of the year. We've already talked about this at 69. From there, she settles into a trading range between 76 and 82. It's a $6 spread. So you buy it at 76 and you sell it at 81, 82, and you make money all year round. So now you throw the dividend in and get the dividend in the next 10 days. The stock usually always moves up just before the dividend. That's why it created that software. You know, if you want to get access to that kind of software, fine. You know, go to the 10minutetrader.com or follow one of the links that in one of these videos. It'll take you right there. Sign up. It's $30 a month, and you'll be able to pick out your own stock for this type of trading. Now, you can make double-digit returns, which is what we've been doing, and a lot of our students have been doing that also. All right. All that being said, that's what CVS is, and that's our position. And where are we with CVS? All right. Now, we bought CVS at 80. And at the moment, she's at 73, almost 74. So we are down on CVS $3,700 for the year. And it's tying up $14,000 of our trading capital. So we're kind of at a $2,500 loss at this moment in time. And it does not look very favorable at this moment. So all that being said, cross our fingers and hope that CVS recovers this week or next week to help us regain on that one. Because I don't like losing money. All right. All that being said, that's where we are. I got no questions. So with no questions, then I can just be done for the day. That all being said, this is James from Dividend Stock Talk. I will catch you guys tomorrow.